time for business with Kate Moody. It's a blow for a U.S. president. We'll talk about it in a moment, who went to Saudi Arabia to lobby the Crown Prince just a couple of months back. What more do we know, first off, about the decision?
Well, it's a major U-turn, bigger than expected, because for the past year or so, OPEC and its allies have slowly been pumping more oil to make up for the huge cuts that were made back in early 2020 at the start of the pandemic. That was when we saw OPEC slashing output by nearly 10 million barrels per day because demand had ground to a halt. Now producers are further scaling back by about 2 million barrels per day. That's around 2% of global output. They are hoping to boost oil prices and their revenue from those oil sales, while governments from the EU and US have been lobbying for more supplies to reduce overall prices. Now, it is worth taking a look at who is making these decisions. OPEC itself has 13 member states, the most powerful of which is Saudi Arabia. The Plus grouping includes 10 other producers, notably Russia. Moscow would stand to benefit from higher global oil prices as it faces a boycott from Europe and seeks to fill up its war coffers. OPEC also said it would be renewing its cooperation between members and non-members that had been due to expire at the end of this year. Francois, that is a real political statement in the current context.
And how are the markets reacting?
Well, not quite as violently as you might have expected. About 3 months ago, keep in mind, Brent crude was trading at around $120 per barrel. Lately, it's been closer to 80 or 90. Now, oil prices have been rising since the start of the week when reports of these production cuts first began trickling down. You can see the international benchmark Brent crude trading just above $93.05 per barrel there. US WTI just under 88. Now, why aren't we seeing a sharper reaction? It's likely because of questions about just how much this 2 million barrel cut will actually represent. OPEC Plus members haven't been pumping enough oil to meet their targets. In August, they were about 3.6 million barrels short each day. Analysts have speculated this means that the real impact of today's announcement will be closer to 500,000 or 600,000 fewer barrels on the market. OPEC pushing back at that, saying its own estimates point to around 1 million barrels. Markets do, though, seem to have priced in at least some of these cuts already.
Yeah, and we're hearing from another oil producer that's not a member of OPEC, the United States.
No, and as you said, we had seen the U.S. lobbying Saudi Arabia in particular to do the reverse of what they've done today. A spokesman for Joe Biden says the U.S. president is disappointed by what he described as a short-sighted decision by OPEC. The president himself refused to take questions on this move as he boarded a helicopter to Florida this afternoon. Perhaps significant that the official communication from his administration has once again started referring to OPEC as a cartel. Now, since March, the U.S. has been releasing about 1 million barrels of oil every day from its strategic reserves. The White House indicating that it would not go further with that for now, although it would continue working to try to ease market pressures. Concretely, that could include some restrictions on exports of U.S.-produced oil, or even picking up a long-stalled antitrust bill, which is known as the NOPEC Act. Meanwhile, the European Union is pushing ahead with efforts to impose a price cap on natural gas. It's also working on the practicalities of a ban on transporting Russian oil that's sold above a certain price limit. That would be in line with a price cap being imposed by the G7. EU Commission President Ursula von der Leyen said the bloc was making concrete progress on a temporary price cap on gas. Difficult, though, because the market itself is so volatile.
Such a cap on gas prices must be designed properly to ensure security of supply, and it is a temporary solution to cater for the fact that the TTF, that is our main price benchmark, is no longer representative for our market.
Another big story in the business world this week, Elon Musk's takeover of Twitter is back on. Twitter shares soared 22% on Tuesday when that news was first announced. They're trading fairly flat on this Wednesday, just slightly in the red, in fact. Twitter's market value is back up to around $39 billion. Musk's deal values the company at some $44 billion. The move probably in part an effort to avoid going to trial with Twitter. That trial was due to begin in about 2 weeks' time. Many analysts have suggested that the Tesla CEO would in fact be likely to lose that case if it went before a jury. Well, earlier, France 24 spoke to marketing expert Alison Stewart-Allen about Musk's vision for Twitter.
Obviously, Elon Musk is in this game for the money. And further commercializing Twitter would be on the cards. Now, you might say, well, how does he possibly do that? If you look at other platforms like WeChat, who he admires greatly, where it's an all-in-one application in a sense. You can communicate, you can make purchases, you can watch videos and be entertained, you can tweet perhaps under his plans for a super app, which I guess is being called X for the time being. The goal, I think, for him is to integrate Twitter into that constellation of applications so that there's a one-stop shop, a single place that users can go. And this is beneficial for the advertisers, it's beneficial for users, and of course, commercially, it would be beneficial for him.
And we have seen Elon Musk tweeting that this was a step towards creating what he describes as the everything app. I think that's open to interpretation.
It's not impressing the markets. I see that they're down a little bit today.
Yesterday it was huge, though, up 20%. So it's important to balance that slight down trip that we're seeing today. Exactly.
All right, many thanks. Kate Moody. We'll have more.